Welcome. I'm Brenda Fontaine, the broker owner of Fontaine Family, the real estate leader, and the host of Your Real Estate Solutions. You have questions, we have answers. Should appliances be included in the sale of a home? Sellers want to get the best price for their home. They sometimes don't want to include appliances for sentimental reasons, or they just try to sell them separately to get more money for the move. But built-in appliances are considered fixtures and should stay. As a seller, you should seriously consider leaving your appliances, since most sellers, and they are your competition, do leave them with the house. As far as buyers are concerned, they're looking for the best possible deal, and when they move in, they don't want to have to go out and buy appliances. For most buyers, all their money is in the down payment, and they just can't go out and buy new appliances. From my perspective, the key to what is or not included is what's in the purchase and sale agreement and what was agreed upon by both the buyer and the seller. After an agreement is signed, it is too late to be discussing or negotiating appliances at that point. In most home sales, appliances are conveyed with the sale. So keep in mind, for the seller, there is more value in a home with appliances included. And for a buyer, it's the convenience of having them there when they move in. I hope this information helps you. Enjoy the show. Julie, thank you for joining us today.
Thank you for having me.
There's a lot of buyers out there that don't realize that there is 100% financing available. Could you give us some information and help buyers know what there is out there available for 100% financing?
Sure. There are two programs. There's Rural Development and VA. Today I'll talk about Rural Development. Rural Development program is, there's two key factors with that program. One is locating a property in the eligible area. There is a map that the lenders reference. Also, it's an income eligibility program. So for example, if you are a household of 1 to 4, the gross income cannot exceed $74,750, and 5 or more, $98,650.
Now, where can buyers find that map?
They would find it, they could Google rural housing eligibility. The link is very long for me to ramble off, but yeah, if they just go to Google, punch in rural housing eligibility, the map will their website will come up.
Excellent. Now, what types of properties are eligible?
Single-family residence, condos, modulars. Some lenders can do brand new double wides on their own land. New and existing construction. If they're adding construction to the program, the work does need to be done before closing, and there are contractors out there that will do that.
How about a 2 or 3 family?
They are not eligible with rural housing, but they are with VA.
Okay. What is the minimum credit score for this program?
Typically we use the middle of the 3 scores, so a 640. We have gone as low as a 620, but it's case by case.
And how long does it take an applicant to have to wait, or to do a short sale, bankruptcy, foreclosure, or deed in lieu in order to be able to get a loan?
It's 3 years from the discharge or dismissal date.
Excellent.
One thing I wanted to add about the rural housing program is if the property appraises higher than the purchase price, they can roll in their closing costs, which is nice because sometimes sellers can't afford to do that. So it does allow that in the program.
That's great to know.
Yes.
Very good. Thanks again, Julie.
Thank you.
Hi, Dee Dee. Good morning.
Good morning. Thank you.
Thank you for joining us.
It's always a pleasure.
One of the questions that we wanted to talk about today is, why is it so important to use your own title company to do a search versus the title that the bank-owned seller offered the buyer in their contract? Because they're always offering them free of charge, so it's very tempting for the buyer to go with the bank-owned title company as opposed to their own title company.
Yeah, no, that's a great question. Oftentimes the banks will offer this discounted title insurance because they've gone to foreclosure, they've won the bid, they're gone through the foreclosure process of obtaining the property back from the previous owner. So
exactly.
They try to, they offer this policy at a discount, which when a traditional consumer will buy their owner's title insurance or their lender title insurance. It's based off the contract sales price. We've talked
Exactly,
about that
yes.
before. And so this time they're offering it at a discount, not always at the full coverage amount of the transaction. And oftentimes they're doing affirmative coverage where they're not protecting. They're protecting themselves as the bank, not so much as the buyer.
So is it more lender's coverage as opposed to owner's coverage?
It's the owner's coverage, but they're not going to cure a lot of what might still be outstanding because they're obtaining the property sort of with the assumption of that what they've done is correct in their title search. And we all know that sometimes things go amiss. You miss
Yes.
things.
What are some issues you might have caught, in the past
Well,
that you could share with us?
Sure. Well, recently, one of my colleagues had a customer who decided not to go the route of using the lender's insurance, that the bank who owned the property, their insurance, and went through our company and went back and found that not only once but twice there was a lien on the property for $30,000 that was missed in 2 previous searches. So it created a problem and it held up the transaction. We worked diligently with the buyer and with our attorneys and reached out to the foreclosing attorney and let them know what they had missed and gave them 3 options. Either they needed to pay off the lien in full, renegotiate, or they needed to redo the foreclosure. I mean, it took 6 months to get to point of being able to offer a
Wow.
free title and free and clear title to the new buyer. But if that buyer would have gone and used that insurance, they would have
Had a $30,000
they would
lien
have
on
had
their
a lien on their
property.
property, and that would have been their responsibility to take care of. And it could have taken a lot of money and a lot of time, and and it may not have come up until they were ready to sell
That's what I
the
was going to
property.
say. It wouldn't have come up until they were selling it.
Right.
Wow.
So, and now they don't have to worry about that. So you really need to think about what your customer is being presented, because free or discount always sounds great in these types of situations.
Exactly.
But you never know. And
No, you
now
don't.
they have the owner's policy. They've got a free and clear title up to this point, and they can go into their new home without having to worry about what is to come down the road.
Definitely.
So, and always, if you have any questions, I mean, these are situations, random things happen, but I mean, always feel free to have your clients reach out to us or their attorney to see, is sometimes good is too good to be true.
Exactly. Because you need to have representation yourself and not take the seller's
Absolutely.
attorney,
You don't
for
want to
sure.
take those risks. Sometimes it's best
Should have
to
your
just
own.
Absolutely.
Definitely, for sure. Very good. Well, thank you so much, Dee Dee. This
Thank
was
you.
great. Thank you for joining us today. Please continue to send us your questions so we can answer them in future shows. Email me, brenda@fontaineteam.com. Also, be sure to connect with us on Facebook. See you next time.